Hey guys, welcome back to yet another amazing video. So today in this video we're gonna talk about candlestick patterns. Now in any exchange market, doesn't matter if you're trading in Forex or stocks or CFDs or even in futures, options, any exchange market, you will come across the candlestick patterns, okay? And these are the most basic yet fundamental concepts of the trading. And you need to understand how the candles are formed and what are the patterns in these candlesticks and how you can trade those patterns. So in this video we're going to go over how these candles are formed, and we're going to see how they start and end, and how this bar and this wick is formed, this candle bar and this wick is formed. We're going to also differentiate between bullish and bearish candle. So let's get started with the video. So first thing, we need to understand what is candlestick. So candlestick is basically a way to interpret charts, okay? So as you all know, in any chart there's always a price column that we see here. So these candlesticks basically are used to interpret charts because they correspond with these prices, okay? And candlestick patterns aren't only the way to interpret charts. There are other patterns as well, which can be hollow candles, Heikin-Ashi, line and area, baseline, Renko, line break, Kogi. So these are all the patterns that can be used to interpret the charts. So we need to keep in mind that candlestick patterns are not the only way to interpret the charts. And mostly traders use candlestick patterns because they reveal a lot of information on the chart, okay? They give us all the data that we need in order to place our trade or make a decision. Like they give us the high, the low, and close and open, which we're going to discuss next. So now let's discuss what are the candles, how candles are formed, and what are its types. So in any trading exchange you will come across, or in any chart you will basically come across two candles. The candle can either be a bullish or bearish, okay? So a bullish candle is one in which our open price is at lower level than the closed price, okay? And a bearish candle is the one in which our closed price is at lower level than the open price. So in bullish, what happens is that the buyers are in control and the price is moving upward. However, in bearish, the price is moving downward and the sellers are in control, and there is a lot of supply of the currency or the stock or CFD, whatever you're trading, okay? So let's discuss how these candles are formed, okay? Now this is basically, this point here is the open. So what happened here, the candlestick opened here, the candlestick started at this price, this candlestick, and then it moved downward and reached this level. Then what it did is it retraced back to this level and then started moving upward, okay? Now what happened here is it reached this high level, and then again it started going downward and closed at this level. So what happened, the candlestick opened here, went lower, and then went up towards this high and then closed at this level. So this gives us the high point, this gives us the low point, and this is basically our open and this is our close. So it's not that straightforward, because like any candlestick, like this is hourly candle, let's say this is an hourly candle. So now in hourly candle, this only gives us the results or the interpretation of this candle in hourly time frame. When we go into lower time frames, we will see a lot of patterns and candles inside this candle, okay? Because this is an hourly candle, so we can say that at the beginning of the hour our price was here, which was basically our opening point, and then it went lower and then it went upward and reached this high, and then it closed at this level, okay? So this is basically a bullish candle because our price moved up and it opened at lower level and closed at higher level. So this is basically a bullish candle. Now let's discuss about the bearish candle, okay? Here we have this candle which basically opened here at a higher level, and then what happened is it reached this level that is basically our high, and then it started going downward till it reached this lower level. Okay, and after that what it did is it retraced back a little bit and closed at this point. So this is basically our open, and this is our close, which is at lower level than this open. So whenever our close is at lower level or lower price than open, then the candle is basically bearish candle, and the sellers are in control, and there's a lot of supply. Okay, so these are basically two candles that you need to look for, and these are basically two candles that you will actually come across in any trading charts. Okay, so now let me show you by example what I mean. So since we are in hourly time frame, we can see that this is basically a bearish candle. So what happened here is it opened up here and then went, let me just zoom this a little bit. So let me see. So what happened here is this, our candle opened up here, okay, and then it moved upward to this point to reach this high, and then it started going downward. Okay, and when it crossed this level, it started making a bearish candle, and then it reached this low point, and then it's closed at this level. And after closing at this level at the end of hour, it started making a new candle from this level. So this candle is still being formed, and you can see the time remaining for the formation of this candle, which is basically 45 minutes and 46 seconds. And now what is happening here, this candle opened up here and it started going upward till it reached this high, and now the price is fluctuating at this point, and it might end up at higher level than this, or it might even end up at lower level than this, because this candle is still being formed. Okay, now let's take another example. So here we have a bullish candle. So what basically happened here is this candle started to form open at this level at the beginning of hour, okay, at, you can see, 13. Now what happened is it moved downward, and then it started to reach this low, and then it started moving upward. It's kept moving upward until it reached this point, and this is basically our high, and then it started moving downward and closed at this level, which is basically our close. So this is high, this is low, this is basically our open, and this is close. And as we know, in a bullish candle, our open is at lower level than the close. And so it started at the beginning of 13, and then it closed or ended at the end of 13, and then again next candle started forming at the beginning of 14, and this candle is basically a bearish candle. So I hope you liked this video. If you have any questions, please comment down below and I would love to answer them. Please make sure to subscribe our channel in order to get notified about our upcoming videos, and you can also visit our website www.forexb.co to learn more about candlestick patterns and forex trading. So also there's going to be a series of candlestick pattern videos, so please make sure to subscribe and follow the channel. Thank you.